Hello, traders. You're welcome to uh, weekly analysis. This is week 41 on GU, that is GBP USD. All right. I urge you guys to simplify your analysis as a trader. The more you make it complicated, or rather, the more you complicate your analysis, you always, be seen trading as a very difficult business to do. But as you move higher, as you go deeper into forex, you discover that it's always advisable to simplify your analysis so that you won't complicate things for yourself. That being said, if you are new to my channel and if you are seeing my video for the first time, please do subscribe. Activate the bell sign. Share my video. If you have any comment, please do drop your comment at the comment section. If you have any idea or experience that you want to share, please leave it at the comment section so that we can have a chat one-on-one. And if you need one-on-one coaching, please do reach out to me. Yes, that being said, as a day trader, we start our analysis with the daily time frame. But that does not mean that we should rule out the fact that the monthly and the weekly time frame that we should not check. But before you go into that, there's what we call uh, forex trading calendar. That calendar is something that all traders should go to know what is ahead of us for the week. From Monday through Friday, there are always activities. So you go there, you check your calendar, you see the news for the week and the activities that will be going on. So it's very, as a trader, please do check it out. All right. And that being said, we start our analysis by first checking the monthly. You see it's bearish. The weekly is also bearish. Then let's go to our daily. All right. So we open our daily chart. Here we are. You can bear with me that we've been bullish, from here up to this point. All right, we've been bullish. All right, that's been established. Why do we confirm that we are bullish? Because we've been breaking structure to the upside up to this point where price stop created a high. All right, like a resistant area. Now price is coming down bearish. All right. Now there's one thing we should have in mind until this level is taken out, we are still bullish. But once this level is taken out, all right, once this level is taken out, we know that we are bearish. Now, to further buttress this point, at this point, this guy here created a demand that broke this structure up. So he has done his job. Now, this guy here, this supply needs to break this demand level. If it breaks this demand level down, that means we are bearish. All right. Now that we are still in between the demand level, the supply has not broken the demand level. All right. The last demand level has not been broken, which is this. I am confidently telling you guys that this leg is still intact, because price can get to this point where price is here and turn. By the time price start going up, if it breaks this high, all right, because this is regarded as a weak high, This is a strong low. Why? Because it broke structure up. So if this guy should, if price should stall here and then turn, all right, like this point, if price turn like this, break structure up, that means we are bullish. The bullishness will still continue. But here, if price breaks this low, if it breaks this demand zone here to start coming down, that means the bearishness has started. So if you scale down to the 4 hourly time frame for us to see what is actually happening. Don't forget, this is a zone that must be taken out before we know that the bearishness has been established. But in the lower time frame, like the 4 hour point of view, you can see this is the high. This is the last. This one here happens to be the last uh, demand zone here that fails, the last demand zone that fails to break the structure up. All right, but just a little spike, but not really significant. I will say this at this point, this is a what? A resistant area. All right, but let's just say a little spike above this high. That means there was a break of structure a little to the upside, but at this point, you can see price is coming down. All right, price came down, is coming down now. Look at this level. This level is already broken. So what do we need to do? We are going to target as what? This point, the TC simply means trend change. At this point, on the 4 hourly time frame, there is the trend has changed because why? He has broken this neckline. All right, he has broken. This is the last demand zone. All right, that's supposed to break the structure up. When price comes down, it's supposed to go up again because as we are breaking structure up, that means we are bullish. All right, what do I mean by that? Once we go up like this, price will pull down, price will break structure up, come down, price will break structure. But by the time you see that price will come like this, all right, store up to this point, come and break this neckline here, then what you need to see is price creating another break of structure to the downside. That means we are bearish. But at this point here, we can see the trend has changed from here. So what do we observe? Break of structure to the downside, then another break of structure to the downside. So in 4 hourly time frame, we are experiencing bearish trend. The trend has changed from here and is breaking structure to the downside. All right. Don't forget, this is a weak low because why he fails to do his job. He's supposed to have broken this structure up to create another obvious high, but he failed to do its job. That means price will come back and take it out. Now that price has taken it out, at this point, we say the trend has changed. All right, it's now breaking structure to the downside. So this is where we are at this point. All right. Now, don't forget the daily time frame. This is the last low that must be taken out before the higher time frame will will turn bearish. So at this point, the higher time frame, that is the daily time frame, uh, is still not bearish yet. All right, look at it. It's still not bearish yet. It's still bullish. It's still bullish until you break this neckline. That is when the bearishness will be established. Once you break this neckline down, we experience a trend change. The trend has not changed yet as far as the daily time frame is concerned, but the 4 hourly time frame, the trend has changed. All right, the trend has changed, and we are bearish. All right, now that being said, so what we will be expecting now is that this is a break of structure, this is a break of structure. Or we are expecting that now that trend has changed and we are breaking structure down, this guy should continue to break structure down. Now, the one that is important to us is how do we now refine it to now refine it to our entry. So at this point, we are expecting price to break structure down and retrace. Don't forget that when a market is bearish, we take our entry from a resistance level. So where is the resistance level? We have a resistance level here, and we have another resistance level here. All right, we have another resistance level here, we have another resistance level here. All right, so it's very simple for us to understand now. What will happen here now is that this area, this level here, this is the most recent level, and what we need to do here is that we are going to look for the under block that causes the push to the downside. All right, the other block that causes the push to the downside, and here is it. So what we need to do right now is to scale down. All right, let's scale down to the, have we identified the resistance area, we'll scale down to 1 hour to refine our entry. All right, let's refine our entry. Well, that is what is most important to us. How do we get in? Is very important to us. All right. So right now we can see that the recent break of structure is this. All right. Now what do we need to do is we are going to um, look at this area. We see this other block that causes this push to the downside. We are going to isolate it. This is the supply that gave this push to the downside. So, and this one too, we are going to isolate it. The other block, that is the last candle, all right, before the push to the downside. All right, this is the last candle before this movement to the downside. All right, this one will be pending because it's a little far, but this is the current break of structure here. Now if you look at it, the downside here, we are going to take this place as what? As a liquidity, because price, we have to strip this place to come and tap into this under block, all right, before we roll down. Then another thing that we need to establish is that this very place here, you see in between this place and to this place, we have what we call imbalance here. This big candle is an imbalance that price will also need to tap into before it gets to this other block, before it taps us in. So what should we do? Bring out our fib tool, all right, from the top down to the level. All right, guys, let's just simplify. Let's simplify everything. Things is not that difficult. All right, anything from this 50%, anything from 50% above is your premium pricing. All right, anything from this 50% above is your premium pricing. So what you need to do, since we have isolated, we've been able to isolate this the other block that caused this push, that is the last candle before this push to the downside, you just bring out your sell tool, all right, open your this thing here, all right, little above it, you put your stop loss, then you target the high as most people will do. You target the high. This is a point of reversal, all right. But with my own experience, I'm targeting this place, negative 27, but a little below it. All right. Why? If you mark, if you trace this thing here, okay, just trace it back and you will see that this place is before, this is the last place here before price will start to push down, before the higher time frame will change. But this is another support area that price will first of all get to. And if you look at it, negative 27 is just at that point. All right. So if you like, you can place your own point here at the point of reversal. You can also put your own here, uh, very close to negative 27. Our advice, just a little tips, you just before that negative 27%, just put it here. All you need to do is place a limit order, wait patiently for price action to tap you in, then you roll down. If you scale down to the 15 minutes, let us refine it very well so that you can see it clearly. You can see that this is imbalance that is seated here that price will have to grab. Price will first of all, because all these points here, people they have already placed their orders here. So price will push, use this point as a liquidity grab, all right, as a liquidity grab, tap into this imbalance before this other block, before it gets to this other block. All right. So what will now happen? Price will tap into this point, then you are in the trade. It's as simple as that, guys. All you need to do is don't do anything. Wait until price, place your limit order, all right, sell limit order, place your sell limit order, all right, place your sell limit order at this point, all right. Price will, you just need to wait until price will play and tap you in, then it will roll down to this point where you will take your profit. You don't need to do anything. Place your stop, your sell limit order just the way I've done it here like this, and just leave it. If price did not come back to tap you in, leave it, let it go. Guys, we have thousands upon thousands of strategies. I tell you, they all work marvelously. But the ability to carve out your own strategy, practice it, back test it, master it, and run with it, that is what makes you a profitable trader. All right, it's a very simple thing. Identify the last break of structure, then refine it to where what actually caused the break of structure, which is this uh, uh, other block here. Refine it, set your sell limit order. If it is bullish, set your buy limit order. Allow price action to come and tap you in. As simple as that. And when once you are, before you identify the OB order block, check and see if there's an imbalance here. What is an imbalance? A gap, a big candle that you see price action will always leave, in between. That is an imbalance, and it's a confirmation for you to be sure that you know what you are doing. And all those movements you see before it will tap you in, they will also serve as a liquidity that will facilitate price to get to where at your point of entry. So test this thing, guys. Like and share my video. Thank you.